All right. If you can hear me, go ahead and leave a message for me. That would be fantastic so I can get an understanding if we are live and functioning. I will move this one over here. Okay. Good afternoon, good evening. It is 7 p.m. in Brisbane. Those of you in Perth, it's a bit early, and those of you down south, Melbourne and Sydney, well, we're going on to 8 o'clock. So thank you for sticking around. I'm going to share a window right now. A little bit of a recap before we get into today's lesson. And I hope that the quality of the image is okay. So how many people here are trading Bitcoin or even just monitoring the market? You don't need to be trading the market. You can be monitoring the market. How many people? We got anyone doing it at all? Maybe one or two of you or none of you at all. I just wanted to go over some of the recent posts, not to get any form of ego boost, but just to show you what I'm doing and what I look at. That way we can sort of build the foundation on how we analyze the markets from the perspective of a Gann analyst or a forecaster. So if you are watching Bitcoin, you may have noticed that the market has tanked over the last couple of days, yeah? Let me go ahead and show you that tank. Just in that one-day bar, we went down 7,700 points. Not the most we've had in a day, but 8.3%. And if we can compare that, yes, thank you, Anthony. If we compare that to other days, we know that Bitcoin has dropped much larger ranges in the past. What we're starting to notice right now is that we're starting to notice, especially yesterday, that the emotion of traders was very high. So I'm just going to show the actual chart that I'm looking at. So let me go ahead and bring it up. Okay. So we have a 10% drop over around the 4th to the 5th of December. And we take it forward in time. We have this drop up here, which is around 9%. So let's just round it up to 10 as well. We have this drop over here, which is around that 10%. And then right over here, we actually didn't even reach that 10%. Okay, we're at 8.3%. Now, I don't want to scare anyone when I bring up this chart, but I would like to present it to you always, every single lesson, because this is the way that we need to look at the markets. And don't worry if you don't understand it. We will do some private lessons on this. However, what we can see is the sun is at 8 degrees Pisces. So that's where it is in the sky. So from Earth, if we look out into the sky and we look at the constellations or the zodiacs, we can see that the sun, from an ancient perspective, would be tracking it around the 12 zodiacs, and it's currently sitting in the sign Pisces. As we enter 0 degrees Aries, emotion is going to start to kick in, and market volatility is also going to start to increase. What we'll notice, or what you should hopefully notice, is that as we approach, so we have basically a big circle in our chart, and this circle is a zodiac wheel. And we can see that the circle starts at 0 degrees over here. It has 90 degrees down here. It has 180 degrees over here and 270 degrees over here. So I'm just going to keep repeating this every single week to you, even if you know it, just so that everyone is on the same page. Now, as the sun begins to approach the 0 degree angle, which means that it moves into Aries and it starts a new seasonal year, emotion gets higher, okay? It increases. Okay, and we see the same thing when the sun reaches this 90 degree point. And we see the same thing when the sun reaches the 180 degree point. And then we'll see it again as the sun reaches the 270 degree point. So this is March. This one down here is June. This one over here is September, and this one over here is December. Okay? So these are what we would call the cardinal cross. So you've probably seen me do this a few times now, where we draw a cross, and these are the sensitive degrees around the zodiac. And the sun is the one that we track, because the sun, more so than the moon, is going to govern and dictate people's emotions in the world, okay? And as the sun hits certain degrees around the zodiac, human emotion is elevated. You've probably heard the rumor or the story that at new moons and full moons specifically, the police will put extra people on guard. Okay, there'll be extra patrols out because people start to go a bit crazy around the new moon or the full moon specifically. Okay. Well, the same thing happens to the sun, but to a lesser degree. It manipulates us in a different way, and I cannot teach that to you. You can only start to learn it and then see it for yourself. Because it sounds crazy, I know, and I don't want to come out sounding crazy. I was introduced to this one around 2016, 2015, 2016 is when I was introduced to this method. And I can tell you that more so than not, this is when the sun moves around the zodiac and it hits certain degrees, the market goes through phases. And I'm using those exact degrees or that exact idea to pinpoint the highs and lows in the market, okay? Just as I've written to you. So when I'm pointing out certain dates that we're watching, okay, as the market comes down, I'll be expecting the bottom to occur, etc. This is when the sun is transiting around the zodiac, and I'm able to find those dates, okay? You can find those dates too. I can't teach it to you in an open forum like this. We need to do it properly. We need to do it in a secure location, meaning that I would most likely have you sign NDA agreements, etc. Because as you know, that while I show you this strategy, I don't actually ever publicly disclose how we do it. And that's our edge in the market, okay? So what normally happens when the sun, and just pay attention, don't click off, okay? I know if you're a little bit skeptical about this, you might click off and think that I'm talking crazy. But what normally happens when the sun, we've spoken about this, approaches this, emotion starts to pipe up, okay? It starts to get really, really hot, steaming hot. And what happens is that we get our market extremes. Now, I showed you last week what occurs when we get our market extremes, and that was highs and lows in the market. Whether you remember me putting on the seasonal dates on the chart, and I was able to walk you through the tops and the bottoms on the chart, well, that is basically the sun's movement. So that's the exact same thing that I was monitoring with the cryptocurrency market, okay? So this here is the 21st. Or if I show you a daily chart, this one here is the 21st of February. Now, my ideal situation, as I walked you through on whether YouTube videos, etc., was that I would have liked that the market had made a top on the 18th, moved down into a low on the 21st, and then head higher from that, because that would have been a bullish scenario. As you can see, as soon as we got this low form, we had to flip our initial interpretation of the market, and then we can see that the market has reversed into a bearish formation. Okay, so we still use the same dates, we still use the same ideology, we still use the same form of analysis. However, we are just changing how we interpret it if the market inverts or not. So what we have here, and I just want to bring this up before we move on. So we have the 18th down here, and I won't spend too much long on it now. We have the 21st up here. And like I said, we were watching for that 25th to be a low. We're now into the 26th, and it all comes down to how the market reacts. It all comes down to how the market reacts right now on these square of 9 levels. Now, if we keep finding resistance, yesterday when the market came down to this low at 86,000, I thought surely it's in, the low's in. And then it came up here and it found this double top on this intraday market. So this is a 1 minute chart, but it found this little top here just below the 120-degree angle, okay? And I was like, oh my God, we're going down even further. This is not going to look good on me. So we kept gyrating up, hitting this zone, gyrating up, hitting this zone. and then we broke lower into its final low. If we look at any of the Facebook posts, if you're in groups like CoinSpot traders or anything like that, you'll know that everyone is saying the bear market's in. You know that a lot of people are very feverish and saying, when is this going to end? I'm losing thousands and thousands of dollars, etc. Everyone was buying the tops, okay? Everyone has been buying the tops. And if we cannot break this zone here, or even break the 180 degrees to 91,000, to put it into plain simple terms, 91,000, and I'll make it bigger in case it's a little bit blurry, then that is bearish. Now, I am a little bit bearish on Bitcoin, not for any particular reason, but we are seeing that the if we look at the daily chart specifically, and we zoom out a bit, we can see a clear double top here, okay? So double top, if we just simplify the whole process, don't look for exact sequences. We want to really focus on the closing of the market. So we can see here that we had the close. If you can see that on your screen, we got the close right here. And then all the way over here, we had the close here. And it never once closed above that zone. So it was double topping, okay? So one top, two top. And then it fell from there. Now, if we use standard technical analysis, and I know that I'm meant to be teaching you and showing you all this Gann stuff, if we use standard technical analysis, price extension, basically we do an ABC. So down to the low, up here, basically go back to that double top, and then we would follow it down. Generally 100% lower would be the base that we would be looking for an extension. And then we could also go 138.2 to 150 to even 161.8. That wouldn't be unusual if the market came down here. So at the moment, we're now slightly sitting at this double bottom range. Okay, we haven't fully locked in this double bottom yet because we are still trading below it. It has to break above it. But it would not be unusual for the market to come down to these levels from a double top. So at the moment, I cannot be bullish. I don't know if you guys have been following my work anywhere else, whether it be YouTube or anything like that. But last year I did put out a video which I said that the rules of the game have changed. And I did that basically, I think it was probably January, February time, just before the ETF launched. Maybe it was December 2022. And just before that ETF launched, and everyone was saying that this is it, Bitcoin's going to go haywire, we're going to $1 million, etc. So the initial forecast that I had for Bitcoin last year, which did prove to be wrong, was that the market was going to go up, down, up, down, up, down. And then my forecast was that we're going to end the year roughly where we began. That was the initial forecasted curve. Okay, that's what I popped out. Now, as you can see, if we take a look at what happened, we know that after November, the market went all the way up here. So basically inverted. This last swing inverted. Okay, and that, whilst you could say, oh, according to the 4-year cycle, is likely to occur because the market is likely to go higher, I made a point that the rules to the game had changed. And whenever you get an ETF on an asset, especially an asset like cryptocurrency, you are no longer playing the same game as you were playing before. And how do I say that without being all cryptic and crazy in my thought process? Think about cryptocurrency and think about Bitcoin. Okay, because I want you to apply this to any other market or any other asset you're analyzing. Okay, the whole concept of Bitcoin was that it was the poor man's gold. It was the average Joe's way out of the system. Okay, that's how it was sold to us in 2009. Okay, we were meant to escape from government control. That was what Bitcoin was meant to be, and governments couldn't control it. Governments couldn't shut it down. So what do you do if you can't control it and you can't shut it down? Well, if you can't beat them, join them. And that's what happened when the ETFs were launched. Okay, so now what we have is we have a situation where companies like BlackRock or MicroStrategy, etc., or even governments and things like that, they are controlling the asset. And they can sell it at the top. They can sell it in an event where you would still be believing that, accumulation, distribution, etc., where you would still be believing that the market is likely to run higher. They would be selling it. So the rules of the game have changed. And what we've just learned is that BlackRock isn't actually buying Bitcoin. Yeah, I don't have the news article. I just briefly skimmed over one earlier. They're trading derivatives of Bitcoin. Okay, so they're basically trading the future market and selling it as an ETF. So you've all been scammed in the cryptocurrency market, and you've all been fed a lie. And if this market inverts, if the 4-year cycle inverts, and we don't get that blow off top that everyone is expecting, and I wouldn't be surprised if we do. Okay, my primary thought process would be that we would get a 2026 top, or 2025, into 2026, because then that would sync us up with the 18.6-year cycle, which I can talk about in the future. Also, leave in the comment box if you have any idea what the 18.6-year cycle is, or if you don't. I've been studying and teaching it for over 10 years now, so I'm more than happy to go through that, and I will cover it in full detail. That would lead us into 2026, which is the 18.6-year top, okay? And that means that in 2026, all these markets are going to come crumbling down, but we need some form of asset to begin that crumble. Now, it can happen early. There's nothing telling us that it can't happen early. 2026 is the last point of this cycle, okay? If it extends beyond that, it would be an overextended cycle, but we are in the phase right now where we'd be looking for a top in all asset classes, real estate, stocks, etc. I think most people don't know the story behind the 18.6-year cycle. Okay, I'll do a full course on it with MTM and teach you everything I know about it. Okay, because it is one of the cycles which you are only going to live through 3 of these in your lifetime, and if you cock up in any of them, it's going to really set you back. Okay, so 18.6-year cycle is, think 2008, think 1997, 1987. Okay, that is those sort of, huge market crashes where everyone and his dog has lost all his money. So the general thesis would be that we would be bullish. We'd get that blow off top, Bitcoin, 100, 150,000, 200,000. That would be the general thesis, but we got to just remember that the rules of the game have changed. Okay. So what I wanted to do today anyway was just talk to you, okay? Talk to you about WD Gann, some of his books. WD Gann wrote The Truth of the Stock Tape. That's one of his books of many. And this is a couple of hundred, I shouldn't say a couple of hundred pages long. What do we got? We've got 2 books in this course. And we're probably looking about maybe 100 pages, 150 pages of content. Now, I have mentioned to you in the past, whether you've watch the replays or not, so I will repeat myself. The golden age of technical analysis is not today. Okay, the golden age of technical analysis was the late 1800s and the early 1900s. That's where basically the stock market started, and everyone went out searching for the golden keys and how the markets work. All we do today is just repeat everything that the older guys have already been speaking about and teaching about. And the best way to learn is to go back to the original source material. Okay, so they've put money on the markets, they've lost money on the markets, and WD Gann was one of them from around 1880s or so back into 1900s. He ended up dying around 1950. Okay, so he's gone. He can no longer teach us, and all we can do is study his work to get an understanding of it. So we're going to take a look. I'm just going to scroll through, and there's a few sections that we'll just take a look at today. Okay, so he's got lots of different topics. We're talking about what is tape reading, can money be made in Wall Street, etc. How to read the tape, how the tape fools you. So he does a lot of this, basic stuff. Okay? But then he also touches on topics that other people don't have, such as your weak points. That is one. The 7 zones of activity. Rules for successful trading. We will go through this because whilst you're learning everything with all the other educators, I'm just going to take you back to basics. Okay, sometimes I'll remove the jargon, I'll remove all this complicated Gann squares of 9 and astrology stuff, and we'll go back to the basics. Okay, it's good to just take a step back. So again, we've got a bit of a quote here at the start. It says, many times the reading of a book has made the fortune of a man. And then we have this little dasher here. So I just wrote or. So many times the reading of a book has decided his way in life. To use books rightly is to go to them for help, to appeal to them when our knowledge and power fail, to be led by them into wider sight and clear conception of our own. So the whole purpose of a book, or having a book in your bookshelf, or reading a book, is to not just read it once and forget about it. It's when you are losing judgment or you're unsure what to do, you would go back to that book. You'd go back to that material, whether it's a video in today's age, and relearn and rewatch and get, try to get a clear mind about exactly what we're looking at. So I'm just going to scroll through because I did highlight a few topics that I want to talk to you today. So we'll skip the ones that we won't be talking about today, and we'll save them for another day because I just want to get you into the mind of things, okay? So the first one is called Trader's Ape. Alrighty. After a man has been around Wall Street for 20 years and watches the action of traders and listens to what they talk about, he will be convinced that the origin of man was certainly from the monkey or the ape. Because the average trader simply apes some leader, repeats what he has heard some great man say, believes it, and applies it to his own case to increase his hopes or assuage his fears. The late Mr. Morgan once said, a man who is a bear of his country will go broke. I've often heard traders in a brokerage office talking bullish and buying say when a conservative man would warn them that bulls sometimes make money and bears sometimes make money, but that a hog never makes anything. Don't sell stock short. A man who is a bear on his country will go broke. When Mr. Morgan, whose opinion as a businessman is worthy of respect, made this statement, he was not talking about the stock market at all. If he had been, he would have said that the man who is a bull at the top of the markets, which occur every few years, is sure to go broke, and a man who is a bear at the bottom is sure to go broke. If traders would only use a little horse sense and do their own thinking, stop aping and swallowing all the newspapers tell them, and analyze the reasons of the motive behind the men who talk optimistic at the top and pessimistic at the bottom, I'm assuming it's going to say, they would make a great deal of money. To make success in the stock market, you must do your own studying and thinking, be neither a bull nor a bear, and no matter whose opinion you follow, okay, you would be much better off if you can verify it by your own study of charts, which show the condition as revealed by the tape and the thoughts and opinions registered by the majority, and not the opinion of one man or group of men, no matter how strong they may be. So I don't need to continue on from that. I hope you kind of understand what we're getting at. Now let's just take a look at Trader's Ape. You've heard it. If we were to modernize aping, we would call it degen, a degenerate, okay? That is basically the modern phrase of being an ape. And as we can see, nothing under the sun changes. What happened 100 years ago, okay, so this book, if it was written around 1920, is happening today, and it shall happen into the future, because that's just how the world works. Everything repeats, okay? There's nothing new under the sun. So think of it, okay? Think of what we can learn from these older books, and we just apply it to modern day. He has this extra point, and he says, your weak points, okay? Man, know thyself. It has been well said that the greatest study of mankind is man. Experience is the only school in which most of us learn. Therefore, it is necessary to analyze the cause of our mistakes much more carefully than our successes. I have to highlight some of this for you, okay? Cause. A great success, either in business or the stock market, is not attained overnight. Now, I want to pause for a second, because you might be wondering, why the heck am I on this stream trying to learn Gann, and all Jonathan's doing is just reading a book to me? If I don't read it to you, you're not going to read it. And that's why I always take my students through the book in one form or another, so that I basically force them to read it, yeah? And I'm not the best reader, so sometimes I mess up and say the wrong words and have to correct myself. So if I do that, that's just part of the game here. The heights by great men reached and kept were not attained by a single flight, but they, while their companions slept, were toiling upward in the night. Does that make sense? So they're working. Mushroom growth is followed by mushroom decay. A man who suddenly becomes wealthy overnight, or by a master lucky stroke in the stock market, seldom keeps it. It is the old story, easy come, easy go. The man who makes a success and keeps his money is the man who, after years of experience, has profited by his mistakes and schooled himself against his weak points. Okay. To make a success in speculation, you must master yourself. You will find that you are either a natural born bull or a natural born bear. You either always hope and believe that stocks will go higher than they do, or hope and believe that they will decline lower than they do. Then you must discount your weak points in trading and know that a lot of your judgment is not judgment at all, but the result of your natural weakness or inclination from one side or the other. Learn to see things in normal state and do not exaggerate either the bull or the bear side. Some men will find that they have too much nerve, are too hopeful, therefore they overtrade. Others will find that they lack nerve or courage and are afraid to buy or sell. If any of you fall into that, you really need to start learning about your patterns, okay? The way that you guys are looking at markets or looking at yourself in the world. Now, unfortunately, to understand this, you either got to take a really good logbook, or you have to learn how to apply it from an astrological perspective. Okay, this is going to show you what your weak points are and what your strong points are. So when he wrote this was one of his first books before he actually started to disclose that he used astrology. He did give us astrological reasonings behind things. And whenever you see the word cause, okay, what is the cause? That is one of his astrological signs that we need to be looking at this from an astrological perspective.